Let's quickly talk about merchandising company and more importantly gross profit. So merchandising company is just going to be a business that buys and sells goods to earn a profit. And there's various different types of companies that are considered merchandisers. And you can see here we actually have manufacturers who sell to wholesalers, wholesalers then who sell to retailers, and retailers who ultimately sell to consumers. So you're all probably pretty familiar with a number of retailers, and those are Walmart, Target, Walgreens, anyone who sells merchandise directly to consumers. Then you have wholesalers who sell to retailers, and this is a little bit more fuzzy. There's some big companies out there that we're all probably familiar with who are wholesalers who sell product to retailers who then will turn around and sell to customers. We'll often hear about, say, Sam's or Costco because they serve, interestingly enough, as both a retailer and a wholesaler. And then you have manufacturers who actually are the ones who take the raw materials, assemble that into a finished product, sell that to wholesalers. And with each step here, we see a markup in the price and the cost of a particular product. Now, a merchandiser's primary source of revenue is sales. Up until this point, we've been discussing service revenue. Now we'll have sales or sales revenue as our primary source of revenue. Then we also have two categories or types of expenses for a merchandising company. That's the cost of goods sold and operating expenses. So up until this point, we've had revenue minus expenses gives us our net income. We're going to add a couple of layers into that to give us some more meaningful information. And accountants are just not creative people in general. So when it says cost of goods sold, that's exactly what it is. It's the cost of the goods that we sell, and it's an expense. It's the cost of our merchandise. And operating expenses are just all the expenses that we incur in order to operate our business on a daily basis. So we've got salaries, insurance, interest, rent, utilities. All of those are different types of operating expenses. Now, in order to calculate our gross profit, which is a very important number, what we do is we take our sales revenue minus our cost of goods sold, and that's going to give us our gross profit. Now this gross profit is super important because we have to make enough gross profit that we can pay all of our operating expenses and have some net income that we can pay ourselves here at the end as well. This is probably one area where most small business owners, that they just don't understand how accounting flows, and they don't realize, one, either what the exact cost of their merchandise is, or they're not pricing their product in order to generate enough revenue to cover the cost of their merchandise so they have enough gross profit to pay their operating expenses and net income.